Good morning. We will pay attention to the steps in the closing process of a service and trading enterprise. You have to prepare the pre-adjustment trial balance at the end of the year to ensure that the debits are equal to the credits. You prepare a trial balance every month from the first month of the financial year until the last month of the financial year to determine if your debits and credits are the same. At the end of the year, this trial balance that you do every month will be called the pre-adjustment trial balance. Then you will prepare journal entries for the adjustments, and you will post these entries to the ledger accounts to adjust the nominal account so that the total income and the total expense for the year can be transferred to the final accounts. So it can happen that the amount that appears in your ledger is not the total expense for the year, so you have to adjust it, because in the income statement and your final accounts you have to show the total income and total expense for the current year. Whether you paid it or not, that's the amount that must go in there. So the amount in your final accounts is the income and expenses if there is no accrued and no prepaid amounts. This amount that appears in the final accounts will be used to draw up the income statement so that you can prepare your total income and total expenses for the financial year after you've taken the accrued and prepaid amounts into account. The balances in the assets and liability accounts are shown in the balance sheet after the amounts were adjusted. So that means that you will create temporary assets, that's accrued income and prepaid expense, and temporary liabilities is accrued expenses and income received in advance. And those accounts will be added to all your assets and liability accounts and appear in the balance sheet. After you recorded all these adjustments, you will prepare a post-adjustment. Post is after the adjustments trial balance to ensure that the debits and credits are equal after the adjustments were completed. So before you do the adjustments, you prepare a pre-adjustment trial balance. After you completed the adjustments, you prepare a post-adjustment trial balance. Then you will prepare journal entries for closing transfers. In the closing transfers, you will transfer all the balances in your nominal accounts to the final accounts. Your final accounts is your trading account and your profit and loss account. So sales and cost of sales will be transferred to the trading account to determine the gross profit. All your other income and expenses will be transferred to the profit and loss account to prepare your net profit for the year. The purpose of the closing transfer is to close the account and take the balance in the account and transfer it to your final accounts. And you will also take the balance in your drawings account and transfer it to the capital account. That means you've got no nominal accounts left over after the closing transfers because all the balances were transferred. Now you will prepare your final accounts to calculate the gross profit in the trading account and the net profit in the profit and loss account. This profit that you calculate in your profit and loss will be transferred to the capital account. And after you've completed all these transfers, you will prepare a post-closing. That means after you closed all your accounts, and this post-closing trial balance will only include assets, liabilities, and capital, because all the nominal accounts were closed off to the final accounts, and drawings were closed off to capital, so you can only have assets, liabilities, and capital. And all these assets, liabilities, and capital in the post-closing trial balance will be used to complete the balance sheet. The only difference between the final accounts of a trading enterprise, that is a business that buys goods with the purpose of selling, and those of a service enterprise, that's a business that doesn't sell goods, they render a service, is a trading account that's prepared for the trading enterprise to determine the gross profit, and the service entity will not have a trading account because they don't have purchases and sales to calculate a gross profit. They will only render a service, and that services with all the expenses will be recorded in the profit and loss account, and that is also done in a trading enterprise.